What's up, traders? Nick Shaheen here, revisiting Bank of America and Goldman trade. I did a video on 6/7. Today's 6/11 Friday. Happy Friday. Markets are, let me see, flattish. They're teetering. Their rotation is still going on. We've got some strength in some areas and weaknesses in other areas. So the S&P is flat. How about that? Okay, so in my other video, the 7th, this is a daily chart for Bank of America. The video was about 2. This was the video right here, the very top. Okay, and in the video, I disclosed that I was short Bank of America and Goldman Sachs, and both trades played out perfectly. In the video, I noted that there was a rising wedge. In fact, I drew it during the video. I'll put a link to it, I think, at the end to that video if you're interested, but if you search my channel, you will find it. By the way, if you're not a subscriber to the channel, it's free, it doesn't cost you anything. Subscribe and hit that bell so you can get alerts. Also, I do have a chat room that you can subscribe to. It's not free to be in the chat room, but it is free to try out for 10 days. There'll be a link in the description below. All right. So, by the way, the link takes you to PayPal, but it's $0 to start for 10 days, and then you can cancel in the 10 days if you don't like it. I do it that way because I need to know it's a real person that's willing to whip out a credit card to get in, even though it's zero cost. I don't want trolls in there. Okay, so this is what happened since then. The logic was it's cheap in absolute terms, it's super expensive in relative terms to itself. And there was a rising wedge, and I said I placed my bet on the downside, even though it could have gone either way. And I said I was the buyer of the puts or in the put spreads. That usually the seller is smarter, and in this case, I was smarter because I had reason to be. And the Goldman Sachs trade is still in play. This one I took off, and because the Goldman Sachs trade, I had two things in it. I had a credit call spread, which is a bear call spread that does not need a rally to win, and that paid me a full dollar out of thin air, and I took it off. Actually, a little bit less. I think I paid 12 cents to take it off. So 80 cents, 85 cents. So now the bull put spread that the bear put spread that I have on it is really cheap. And it's actually not a vertical put spread. It's kind of a diagonal put spread, but that's besides the point. So I'm still bearish Goldman Sachs for a couple of reasons. So here's the chart, the way I drew it on video last time. I drew these two lines on video. This breakout was done way before the breakout happened, and they came almost exactly to it. So far, the chart is going exactly according to my plan. And my video was not nefarious. I was just saying this was the mean, and so what if it goes down to the end of the channel? That's what it's been doing. Every dip is being bought. So if you like the stock, that's normal price action. I just took advantage of it from here. So nice little dip for me. And also the reason why I mentioned why am I against the banks rallying to high heaven, I said the P&Ls are not moving. They're moving down a little bit and things are tougher for them. And yet the stocks are going ballistic like they're tech stocks or growth stocks, and they're not. So that was the dislocation. Furthermore, I also offered evidence on the TNX. I said the TNX is going ballistic and it cannot continue because governments will go broke. And the TNX was 6/7 here. And the TNX had a little tizzy. In fact, for the members, I also issued a TLT long right here, and boop, we got the pop the next day. So any which way you slice it, the trade was solid, and this is an update because somebody just asked me, what do I do with my Goldman Sachs? Is it time to close the puts? I don't know what they should do. So the discussion starts about Goldman Sachs, and that's the point of this video. What do I do with my bear? So I sold 392.5 call spread. That paid me money out of pocket. So that is booked greens. I was an owner of a $4.50 cost put. So now it's $3.50 to round. And furthermore, I sold puts for this week that expired worthless. Well, they're now like half a penny, but they're going to die worthless at $3.50. So way down here. So, and my puts are way out in time. Now my cost basis is a lot smaller. So I can sit and wait to see what happens. What am I looking for? this candle right there. So this is support. If you look left, it was a breakout, covered the gap, so everything is hunky-dory, right? This is support. This happened yesterday, and now they're bouncing. I guarantee you there should be sellers into 380, 382. From the chart says with confidence there should be sellers into 380 and 382. And if that's the case, what if they do this? And this is where I want to take my chances. That's why I'm waiting. All right. What if they do this? I'm speculating. Okay. This is me showing you how I can speculate. I'm going to stop right here. So if this happens and they retest this and fail, see, there are two ifs. If this happens and if they fail, so that's two ifs, then this is going to happen with a lot of support. So I'm waiting to see if they fall out of the channel. Odds are against it, but two dojis right there on a 2-hour candle. So that's 4 hours of indecision today. What does that mean? They open, they run, they fall, they come back. They open, they run, they fall, and they come back. They're trying to decide something. So I'm wanting to see what they do Monday, Tuesday, Wednesday. And if that happens, I think I won't even renew the sold put until Monday to see what happens. So that's me. Other people may manage their positions differently, but I shared with you the day I was short. I'm sharing an update. I disclosed my action. Bank of America short is off the book for me. So now I'm staying short this one with finite amount of risk, because even if it pops on Monday, I can get out evenish. So I'm almost risking nothing unless it goes to like 400. Then my puts will blow up in a bad way, but that's highly unlikely. Although I shouldn't say that. Famous last words in this market. Look at Neo. Anyway, let me see if I can give you a look on Bank of America. So this is a shorter term look on the Bank of America wedge I showed earlier. So what about it? It is falling into support, but to me, I wouldn't catch this falling knife. I don't know where it goes. It could go to 40. It should go much lower, but I'm not going to fight with it. It has support. It's a good company. Goldman Sachs is a different kind of company. It's not a bank. I thought they were trying to be a bank, but I don't hear about that anymore. But Bank of America has a lot of exposure to mortgages. I think it's 1 or 2 in the biggest lender in the U.S. So it's a different kind. And these guys, Goldman has a trading desk. I don't know if Bank of America does or not. If it does, it's not as famous as Goldman's. So both companies may be in limbo, changing their profiles, more so Goldman Sachs than Bank of America. So there's a lot to say there. Anyway, hopefully this was helpful. This video came out because of Dave. Thanks, Dave, for the question.